Hello everyone, this is Red with RedDragonLeo.com, and it is Sunday, October 31st, Halloween 2010. What an exciting time to be. Okay, so what are we looking at here for next week? I'd say we're looking at the mother of all crashes getting ready to come. I really do think that that's going to happen. While I won't rule out the odds, or the slim odds, I should say, or chance that we could possibly rally up to that fake print of Dow 11,800, I just don't think it's on the cards, on the table for right now. I think it's planned for next year, maybe in January or February, or even later, who knows. But I suspect probably January, February sometime. And the reason I say that is, I'm going to explain why, but one, of course, the charts, but then we're going to get into a little ritualistic stuff too as well, and some covers by Barron's, and just a lot of things that point to us basically crashing next week, having a big sell-off start next week as opposed to a rally. You know, based upon the Fed's coming out with their quantitative easing too, I don't think that they're going to be able to put enough money in. Well, I guess they could if they wanted to, but I don't think they want to. They have to take profits at some time. They have to steal the money from the American public, and the best way to do that is to crash the stock market and for them to be short. So I think that this is already planned. It's already in the cards. So whatever amount of stimulus they do give out, I don't think it's going to be enough to satisfy the market. It will be minimal, probably. I'm hearing ranges anywhere from $500 billion to $3 trillion that they need, supposedly, to keep the market from crashing. I don't know what they're going to give out, but I would just guess that anywhere between $500 billion and $1 trillion is probably going to be looked at as a disappointment after an initial rally, an initial spike higher. So I think what's going to happen there is, if they, for example, give out, say, $1 trillion, or promise to give that out, over the next 6 months or so, we'll get a little spike up and basically maybe go up and hit a double top. I don't know, maybe we just hit that 1196 area. If we look over here at the daily charts, we hit that 1196 area. We go back over here, and that's about the 1215, I think, just what that high was, or something like that. I can't see it for this right here, but I think it was like 1215 or so. So we could go back up to that area and take out all of these bears that are still holding on right here. All the bears, none of them, I'm sure, cashed out. There were very few cashed out right here. Maybe a few cashed out on this move up, but there's still a lot of bears in here waiting for this thing to tank. Now, I do believe that they're going to shake them out before they take the train ride to hell with this market. And so I think I posted a chart that Apple Owl basically provided, showing a wave E completing on a down move Monday, and then a final wave 5 up to around 1215. I don't know if it's going to get that high. I don't know if it's just going to hit a double top here, but I do expect one more shakeout move, and I expect that on Wednesday, as the FOMC meeting, as the Feds come out and say they're going to give so much money, whatever it is. I think there'll be initial reaction. There'll be a spike higher, a rally higher, and then it will fade and die and roll over Thursday or Friday and start to head back down after the initial high wears off. And they realize that, hey, maybe this ain't enough money, or hey, this is a bad thing, that we're going to put too much money in, whatever. It's going to be a buy the rumor, sell the fact, and that's what I think is going to happen. Most Fed days are up days anyway, so just remember that. So the initial move that I have seen in the past, it doesn't always have to be this way, but the initial move that I've seen in the past is a quick move down to fake out a lot of people. I've seen that happen many times, and then a quick reversal and run back up. That doesn't mean we're going to that 12:15 or whatever on the Fed day on Wednesday, but we could. You never know. They could mount a massive rally. You know, you get 5 days of bears getting short right here, so there could be a lot of bears in here to squeeze out. So you know, we actually could have a huge rally. Maybe only go up to 1196 and hit the high, and then maybe on Thursday an initial spike and put in a topping candle and then reverse hard, because you can guarantee there's a lot of people waiting up here to double top. So if we hit 12:15, you know, there'll be a ton of more bears get on board. These are more the professional traders, and these are more probably the amateurs right here getting short. But they're going to squeeze these people out before they take this train ride to hell. Now, as you can see here on the charts, it does look like we could roll back up right here very easily for a day or two, and then put in a little histogram tower and then roll back down again. So you know that is possible. It is possible. I won't put it past these gangsters to do this. So let's keep that in mind. But on the weekly chart, as you can see, we've clearly went up. We have tagged the 200-day moving average. We tagged it at 1194. We did tag it. Because went past it 1196, so it's qualified there. So that doesn't mean that we have to go back up next week and go up to 1215 as Apwell is suggesting. I don't think he's necessarily suggesting the price target. He's just suggesting a move up. So you know, it could simply be again up to 1196 again to make that right there, and then roll over to make a double top at that. As you can see, we're clearly rolling over on the weekly. I do believe that this FOMC meeting is going to set the pace for the next couple of weeks, the next several weeks, that I think there's going to be a massive sell-off. More reasons than this just right here. I posted in here, you know, we had a false flag event again, a terrorist attack that was basically a terrorist scare. I won't say it's an attack because they did manage to stop it from happening. But it always happens. They always talk about, you know, these terrorist attacks always seem to come right when the market is topping and can't go any further. Back over here on April the 20th, this area here, BP had their little oil spill. Now, wasn't that a coincidence that they had their little oil disaster, or I should say false flag, because Halliburton was the people on board 10 to 20 hours prior to that and set the explosives most likely to blow it up. They're part of the gangster gang too, you know, so they do what they're told, I guess, by the Illuminati, by the feds, you know, who tell them what to do. So they got on there, they blew that up, and the market was basically topped right here. But it did go for a couple more days, and then it had one lunge up to wipe out all the last bears before it finally started crashing down in a 1, 2, 3, 4, 5 wave move, whatever here. 1, 2, 3, 4, 5, yeah. So okay, but the bottom line was, you know, this was April 20th when the oil disaster happened, when that false flag was staged by the government, and the market peaked on April 26th. Okay, over here, what do we have on Friday? We had the terrorist mailing a bomb that they stopped it. You know, it was just a scare. That doesn't mean that they won't do it again next week sometime and make it real and actually blow something up. I hope not. If they want to blow something up, why don't they go straight to the Federal Reserve Bank and blow up Ben Bernanke and all them other gangsters inside there? That'd be the ideal situation. You know, if you're going to kill somebody, why don't you kill the crooks instead of poor innocent people? But of course, they're the ones that's staging it. So false flag events are coming. No question about it. One of the things I wanted to show you here, I finished writing my post here, and of course I haven't added the videos yet because I'm doing the videos. But I wanted to show you something here that, oh, you love this little graphic. I do love this. I put these idiots on the train ride to hell. You'll like the post. Last week or the week before, this guy here talked about about November 14th. And be sure and re-watch this video. It's very important that you re-watch it. And be sure and watch this. If these aren't telltale signs of what's coming, I don't know what is, folks. This is pretty obvious to me what is coming. Just as I was doing this video, Serge over at ETF Corner went and did his post, and someone posted it for him. Posted a link on my blog about this post right here that Serge has done, and I had seen this as well on CNBC that they had posted the newest Barron's cover, and this is so true. You should go over there to Serge's site, read his post. It is so true. Here's a picture of a bear basically getting hit by a bus right at the April top, and here we are today with the latest picture on Barron's of the bear saying bye bye bear. And down here at the bottom we are, you know, the bull gets squatted right at the bottom. So, you know, Barron's probably is owned by the Illuminati too, controlled by the guys, the gangster gang, and so they put these on here to tell all their buddies, hey, the bottom is in, let's you know, let's rally, and here the top is in, let's sell off, and here again the top is in again, let's sell off again. So that, you know, these are clues, folks, that the top is in and that we're not going up to the fake print of 11,800 roughly, that we're not going to do that this time around, that we'll probably save that for next year. Now that does not mean that this is going to go down all the way down and take out this low and keep on going down to you know, wherever, I don't know, down to the Dow 8300. It's not, that's not written in stone. I'm just saying that we're going to have a correction. They're saying that we're going to have a correction. They're telling us this. Whether it's a crash or not, I don't know. So maybe we go down into that November 14th low that this guy was talking about, or maybe a little further, maybe into late November. And then we rally back throughout the Christmas season into January and February. And then hit that final 1260 to 1280 print in that area, which is your 11,800 fake print on the Dow. And then when we hit that move, of course, then at that point, then we could go down and just take out everything below, take out the 666 low, take out everything. Just, you know, that's it. At that point, I don't have any further upside fake prints. That fake print is it. So, you know, that's still lurking overhead. So whether or not we go down and hit the Dow 8300 print this time around and then rally back up, I don't know. But, you know, we're definitely going to have a big sell-off coming starting next week, I do believe, because based upon everything that they're telling us, it's coming. I think it'll take out the 1010 low, but now whether it goes to the Dow 8300 print or not, we'll have to just wait and see on that. Maybe we will, maybe we won't. Okay, the dollar here, as you can see, Ron Walker's clearly pointing a triangle here. It should pop up next week. We're not going to go too much over that. He does a great job of that. You know, mine's more on the ritualistic side of things, and as you can see, and the other news that's out there. As you can see here on the 60-minute chart, we are looking pretty weak here, like we're ready to roll over. You can draw a big line from here to here to here. Man, what are you talking about? 1, 2, 3, 4, 5 negative divergences basically there. That's a pretty powerful one. So I do believe we're going to come down Monday. I don't know how low. This is some pretty decent support right here at 1, 2 double bottoms. Since the market's going to be low volume, I wouldn't expect it to be too far down before it starts to turn back up as the Feds come in and try to save it before the election day. I don't think we're going to crash on Monday, okay? But I do think that we're going to roll over some on Monday. Let these charts get oversold on the 60 and on the 30. Let them get oversold, and that will allow them to, you know, maybe down here again, that will allow them to rally back up and break out of this triangle pattern, basically, to rally back up on Wednesday and maybe get back up here to this 1196 high, or even to the 1215 that Apple suggested. So So keep that in mind. Maybe down a little bit on Monday morning and then up into Wednesday's FOMC meeting. Okay, I'm running out of time on this video. I'm going to do another one.